Great pleasure. Let me now bring on board the Steel Secretary of India, Ms. Aruna Sharma. Ms. Sharma, good morning. Thank you for joining us. Uh, what is your understanding of how domestic steel prices have gone higher? Because now suddenly the arbitrage which Indian steel companies had, because domestic prices were lower, global steel prices, there were disparity between domestic and global steel prices, that is over now.
Yes, I'll put it that way. As you have presented beautifully in the graph, Indian steel prices are still lower than the global steel prices, and definitely there is not much of a case to enhance more and more of the steel prices. It has already absorbed the shock of enhancement in the iron ore as well as in the coking coal, so it is settled there. But what you presented in the graph very correctly, steel price below 35,000 does not make the Indian steel industry to be very competent in manufacturing, and it starts incurring the losses. So there has to be a break even point with a small margin of profit, and there has to be a point where it does not become an extortionist. So between 35 to 40,000 is very reasonable what Ministry of Steel's calculation goes, and it varies depending on the vagaries that happens in the input prices and not so much of the international rate prices. And what you talked of the anti-dumping measures are to continue just to ensure that nobody starts dumping steel less than their cost of production. So even if the cost of production in China is much more than our safeguard value, it only ensures that the steel from China does not come here lesser than that cost, and that is enough kind of a correct WTO way of working, and that is what the Ministry of Steel has been resorting to.
So what you're confirming to us, Ms. Sharma, is that as of now, the ministry is not considering a change in the duty structure, and you are happy with the existing arbitrage.
What we are not contemplating is not the duty structure. We are not touching the anti-dumping levels. We are definitely being very strong in the BIS standards, which we have added. Today, I think if all the various sectors, steel has got the maximum number of BIS, 36 of them are in place, which covers nearly 70 to 80% of the steel. Another 19 are in the offing, that will cover nearly 85 to 90% of the steel. So no poor quality of steel will be coming in India, so that we are going ahead. And what you mentioned on duty sector structures, we are seriously contemplating that on the principles that what we don't make in India, we should not make that input material more expensive in India by imposing of the duty structure. So we are arguing and we are projecting that there is a case to bring down the duty structure to zero as far as ferronickel is concerned, as far as ferrochromium is concerned, scrap is concerned, because scrap 7.5 million tons we are importing. The day we start producing our own scrap, we should impose the import duty, and in fact we should impose the enhanced import duty then, but not on date. And the fourth case is of coking coal, because that is going to make a lot of difference in the input cost and stabilize the price. So it is not so much of stabilizing the price of steel, because steel is a big input in the infrastructure development which India is going ahead with. So there is no logic of enhancing the infrastructure cost of making the infrastructure by these import duties, because it is from government's one pocket to other, because maximum infrastructure work is being done by the government. So it is very important that when we put a life cycle cost, steel is the choice, then the capex should be as competitive with any alternate material as possible. So that is a case where the steel has to settle on, and that is a place where the steel prices will settle down.
Right, Ms. Sharma, the concerning point, however, in the industry is not so much on the supply side, but more on demand. FY17 saw very meager steel consumption growth, and India continues to be one of the lowest steel consumers. How will you tackle this issue, especially in terms of capacity utilization?
You are absolutely right that we are a low consuming country, but along with that we are also a low infrastructure country, and we are a country where there is a strong case of infrastructure expansion, as is visible from the budgets of last 2 years of the government. So there is a huge volume which is going in infrastructure. The GFR amendment has made it mandatory now to calculate the life cycle cost. So moment you calculate the life cycle cost, steel is a winner. So there are a number of places where now steel consumption is going up. To give you examples, in ports and harbors, their construction in their piles. If you look at it, the construction of the new airports, new railway stations will be steel intensive. Then under Pradhan Mantri Awas Yojana, the steel intensive housing is going to give a big fillip. Then all your highways, so your crash barriers, your bridge of railways as well as of the national authority, CPWDs, PWDs, that is giving a boost. Already the work has started. The rail replacement expansion, that is also going to consume a lot of Indian made steel. And then coach, which more and more routes will be added, the wheel factories. So all these sectors are going to give a big fillip to the steel consumption. And if you look at the statistics, from 50 kg per capita to 60 kg per capita, we took 7 years, there's kind of a 10 kg jump. And from 60 kg to 65 kg, we have taken just 1.5 years. So in the sense that our track is right, the consumption is going up, and even on date, when we are nearly going to touch 100 million tons in this financial year, our consumption is going to be around 90 million tons. So our export is in fact much more. We export around 10 million tons, we import 9 million tons. So in the sense we will be touching that figure in consumption. So absolutely we are on a right track. The consumption we are targeting to settle somewhere around 160 kg per capita as we proceed ahead. And now the steel industry has also come up with ready to use product and one point shop. So in the sense you will get all your materials that you required, and basically it's a very green industry. So if you replace timber with steel for your doors, wardrobes, kitchen modulars and everything, it's a lifelong clean investment and very beautiful, very nice patterns they have come up with. Similarly with the bridge, 100 years you don't have to worry about it, no maintenance, you get it well. And non-corrosive steel is also now coming in a very big way for the coastal areas.
Right. Interesting to hear that. There has been, like you said, a huge surge in India's exports in 2017, and I think you alluded to the numbers as well there. But a significant chunk could be attributed to the drop in Chinese exports, ma'am, that enabled Indian makers to capture, the market share loss there. Do you believe that the export numbers could dwindle as China once again reopens capacities post-winter?
No, absolutely no problems, because as far as China is concerned, they have gone in a big way to close their induction furnace, polluting and inefficient capacities. And they have done a good job about it by closing down nearly 60 to 70 million tons of production. But parallelly, they have also enhanced the techno-economic parameters of their new capacities. So their overall production has not come up. China's own consumption is 90%, so they enter the export market 10%, which is not a small number, 10%. It comes to around 70 million tons, and that is enough to upset the markets. But China is also moving towards high-end products. As far as Indian exports are concerned, our exports are not limited to China alone. We are also exploring new markets as we are proceeding ahead. And our own fillip to shipping industry, to defense production industry, to capital goods industry, I think we have enough requirement to absorb within the country itself, as we will be rolling down in coming years.
Ms. Sharma, is the steel ministry supportive of what currently banks are trying to do with some of the bankrupt steel companies where M&A currently is on? Will the steel ministry support change of ownership in some of the important steel plants in India?
You are asked a very ticklish question. It's a quasi-judicial proceeding, so I think none of us can comment on it. So being a quasi-judicial proceeding, let it move ahead. What are we more interested is that the expansion should take place of the capacities instead of just change of labels, and there is a need of infusion of better and better technologies. So that is what the Ministry of Steel is will be watching, that better technologies and more expansion come. Change of label could be a part of the NCLT process. It's a quasi judicial process. I have no comments to make on it.
What is your understanding of the new steel cycle in India? We just heard from Tata Steel that they are looking at announcing a fresh capex cycle or fresh steel capex cycle in India. So on a realistic basis, how far do you think India is away from a new capex cycle for the Indian steel sector?
We are absolutely on the verge of it. The year 18-19 will see realization of lot of the old capex investment, and a new cycle is going to start. And like I mentioned before, with the more absorption within the country, definitely it is going to make lot of difference and encourage the steel manufacturers to invest. So it is not just the big private industries or the PSUs. The secondary sector itself will also double up its capacity in the coming 10 years, and they are also working out the various plans to go ahead with it, because if you look at the pie graph, they contribute 57% of the steel, and the steel ministry's projections is that when we reach 300 million tons, their contribution will continue to be 57%. So they are on the expansion mode. They are taking BIS stamping, they are going for the standard steel productions, efficient steel production. Similarly, the 24% of the private sector will continue to have 24% and more expansion. The PSU's contribution has been dwindling between 16 to 18, so they will continue to be there as they are moving ahead, and they will consolidate what they have invested in their expansion. So in the new capex cycle, definitely all of them will be contributing and moving ahead. And in fact, the target of the steel ministry is the doubts always in the steel ministry, as it's a cyclical industry. We want to come out of it, because India being in a growth trajectory, high GDP growth, and steel contributing to the GDP, steel contributing to the consumption in the infrastructure expansion, I see that in coming 10-15 years there should be no looking back in the steel industry as far as the efficient production of steel industry continues to grow.
Okay, my final question, and allow me to be slightly direct here. If I look at the cost cost and efficiency of the Indian PSU steel sector, they are not very efficient. What is the ministry trying to do to ensure that companies which are companies like SAIL, they become bigger and more efficient?
What you say is absolutely right. If you compare the techno-economic parameters internationally and you compare them with India, we are not even half. So when we are talking of enhancing to 300 million tons, we are not talking about only the new expansion or new investments that come, but also to improve the techno-economic parameters of the existing infrastructure which the steel makers have created in India. We have to do that, and a step has started towards it. Now the best blast furnace output that I can state today is of Angul, which is giving an excellent blast furnace outputs as we are going ahead. So you have international techno-economic parameters, you have a demonstration here, and the Kalinganagar also blast furnace is going to have a very excellent level of techno-economic parameters. So in India itself, we are having examples to which the others, including PSUs, will have to compete with. And as far as the PSUs are concerned, we have set the benchmarks at every step. We have BCG in place. From ministries, we have put 4 experts in place. The SAIL and RINL staff themselves and their CEOs, everybody is working hard to come out of it, because they have to compete. Now a PSU has to compete and has to have efficient parameters to compete in the market. It's a deregulated sector. The market rates are going to be decided by the market. They will be competitive with each other, and that is how they will have to grow together. Inefficiency cannot continue for long. So anybody who is inefficient will have troubles in the coming years.
Right, Ms. Sharma, even my final question, I know you've spoken about operational efficiencies being put in place for PSUs. What about financial efficiency? Take for example SAIL. Its high debt has prevented the company from turning profitable. However, media reports suggest that SAIL is looking to turn operations around via the inorganic route. So just taking SAIL as an example, what about overhauling the financials of these businesses to make them more efficient so that they can actually invest in project execution?
You have said a very pertinent question. It goes like this: what investments for expansion they made in the past, the return on investment has been delayed because delayed projects or delayed completion of projects. Now in the year 17, calendar year 17, many of their projects are near completion, and in the 18 we expect them to be complete and their return on investments will start. That will show a good scenario. This financial year, in this quarter, that is the December quarter, there will be a little bit of cash surplus in some of the months, and we expect it to continue, as you specifically asked for SAIL, to have a little cash surplus as we move ahead towards March. But that's just a beginning of turning the graph towards upward line than sinking. But still a long way to go, because they will have to have a cash surplus of nearly 5,000 to service their debts in the coming years, and that is how they will have to proceed in their margins. But we are optimistic because their return on investments will start, and they will have to go for a vigorous marketing because some of the products have to move ahead and then make new investments in the value addition. So this is the graph for the SAIL as it will proceed. So step by step it has to move towards it, and at least I will say today that it is in the correct direction. So in the sense 18 should show a much more consolidated platform to take off in the year 19.